Hello, everyone, and welcome to year-round 1099 and W-9 compliance. This 50-minute webcast is brought to you by CPA Practice Advisor and Avalara. I'm Gail Perry, Editor-in-Chief of CPA Practice Advisor. And before we get started, I'd like to explain quickly how CPE for this webcast works. The webcast is 50 minutes and qualifies for 1 credit of continuing professional education. If you plan to earn CPE for attending this session, you must stay with us for the entire 50 minutes. In addition, we will display 3 polling questions during the webcast. In each poll, you need to record an answer, as this is our verification that you are still watching. Later today, you will receive an email from CPA Practice Advisor containing a link to your CPE certificate, assuming you met the qualifications for certification. Please note that we can give CPE credit for multiple people at the same location. So if there are others in your office who would like to attend this event at the same computer, please have them join you now. At any time, you can enter questions in the Ask a Question box provided on your screen, and our speaker will try to get to as many questions as possible during the presentation. Questions not answered during the live broadcast will be addressed by the speaker afterwards in email. If you have any difficulty answering the polling questions online, you can always post your answers in the Ask a Question box and we will record them there. Slides are available for download for this session. You can click in the event resources at the bottom left of your screen and then click on the PDF file that's displayed. We are grateful to Avalara today for making this event possible and for enabling us to offer a free CPE credit to our attendees. Today we're joined by Tim Garton, Senior Director of Operations at Avalara, who will be presenting this webcast. I'll have him introduce himself, and then we'll get started with the presentation. All right, Tim, it's all yours.
Thanks, Gail. And just wanted to start off by saying thank you, everyone, for joining us this morning or this afternoon, wherever you happen to be. Once again, like Gail said, I'm Tim Garton, and I'm here. I'm going to be able to have the pleasure of talking to everyone about year-round 1099 and W-9 compliance. And so why don't we go ahead and have a look at what the agenda is for the day. So I want to start off, I'll give a little bit more of an introduction for myself, then want to touch on sort of an overview of what constitutes 1099 income and why these forms need to be filed with the IRS. And that's just going to kind of set the playing ground here. I know that many of you may already be quite familiar with 1099s and why they need to be filed, but just want to make sure that we're all on the same page with that. Then we're going to dig in a little bit to filing requirements, look at the deadlines involved and what sort of delivery to recipients is required. Talk a little bit about the penalties around 1099 filing with regards to not filing on time or inaccurate filings. Discuss a bit about why it's important to gather W-9s, because this is something that sort of gets glossed over a lot in the 1099 filing space. Talk about our sort of recommended year-round compliance timeline, and then we're going to wrap up at the end here with some sort of horror stories or things that you definitely want to avoid from a 1099 filing perspective. So yeah, giving a little bit more of an introduction for myself. I have over 12 years of experience in the 1099 filing space. It's not something that you typically brag about, but in this setting, I guess it makes sense to to brag about it a little bit. I manage the Avalara. I help manage the Avalara 1099 product here at Avalara, and I've been doing that for about 2 years. I actually originally got into this space with a smaller company called Track 1099, and that was 12 years ago when I got started with this, and worked with that company up until about 2 years ago, which was when Track 1099 was acquired by Avalara. So that's when I came on board at Avalara, and that's been a great acquisition. It's been fantastic. Avalara has been very enthusiastic about promoting this product and building out the 1099 filing offerings. So it's been sort of an exciting couple of years here. And then on a more personal note, when I'm not spending my evenings reading up on IRS form instructions or filing specifications, I enjoy some hiking, camping, reading, running, and I'm an avid board game geek. I've been playing for any other board game geeks out there. I've been playing a lot of Splendor with my wife these days. All right, so to start this off, let's talk a little bit about what constitutes 1099 income and why these forms need to be filed with the IRS. And I want to first sort of start off by just, giving a definition of what these forms are, so that we can kind of start with that, but then elaborate a little bit and maybe give some examples of what constitute this income. So the IRS Form W-9 is used to request the correct taxpayer identification number from a vendor / company / individual for which non-employee income was or will be paid during a calendar year. And so sort of the interesting thing to note there is that the W-9 is not a form that's filed with the IRS. This is a form that a company will give to a vendor and ask them to fill out and return it to them, sort of in order to get that information from the vendor that they can use to file a 1099 at the end of the year. So it gets the vendor's legal name, tax ID, whether that's a social security number or EIN, and an address, and that information then is used to report at the end of the year. And then the IRS Form 1099 is filed annually with the IRS to report non-employee income paid to the vendor and should use the information that was collected on a W-9. The 1099 is required if the vendor / company / individual receives payment for services throughout the calendar year. And so that's all well and great, but it kind of begs the question, what is non-employee income then? Right? And so most of us are more familiar with what the IRS considers employee income, and that's sort of the typical case where you're an employee of a company, you have a salary, you get a paycheck every month or biweekly. At the end of the year, the company issues you a W-2 in January that then you use to file your taxes, right? And so that's the IRS considers that to be employee income. So non-employee income, which is reported using a 1099, is sort of everything else. And I think it'll help to give maybe a couple of examples to describe what that income can look like. So, the classic example here might be, imagine that a company decides to send a monthly newsletter out to all of its customers. And maybe the company is a little bit smaller and doesn't have a writer or editor on, as an employee. And so they decide to hire a freelance writer / editor to do this. And so they find a freelance writer, and she works on this monthly newsletter. She puts in 10 to 15 hours a month on it, and she submits an invoice to the company at the end of every month. And then at the end of the year, you total up everything that the company's paid her. Say it's $4,500. Well, at the end of the year, the company needs to file a 1099 NEC with the IRS reporting the income that was paid to that freelancer, and also needs to provide a copy of that 1099 NEC to the freelance writer as well, so that she can file her taxes. She can use it to file her taxes. So that's kind of the classic non-employee 1099 NEC non-employee compensation situation that classifies as non-employee income. But there are actually a whole ton of other groups of income that fall into this category. So one other one that's the quick one that people might be familiar with is, in January, many of you probably receive a 1099 int from your bank, and this reports the amount of interest income that you were paid in your savings account over the course of the year. And so that income is also considered non-employee income. It needs to be reported on a 1099, and in this case, it's a 1099 int, which stands for interest. So looking at the slide here, you can see there are a whole ton of different types of non-employee income that the IRS cares about. And so there's 20 plus 1099 forms that can be used to report this income. And from an accounting perspective, dealing with your clients, I wanted to maybe just touch on some of the more common ones here, because some of them are a little more esoteric and you don't see all that often. But I do want to touch on some of the more common ones here. So the 1099 NEC, which is the one that I sort of mentioned in that freelance writer scenario, that's probably the most common one that you're going to see from an accounting perspective with working with your clients. And this is for when a contractor, individual, vendor provides some services for a company and gets paid for those services. Then there's the 1099 miscellaneous, and this is the second most common, and this sort of covers a number of other categories of miscellaneous income. And the interesting thing there was that the 1099 miscellaneous used to be the primary form up until about 3 years ago, and the 1099 NEC didn't even exist, and they actually split the 1099 NEC out into its own form at that point. But the miscellaneous can use, report other income like rents from if you own a property and you have rental income, as well as some other miscellaneous ones. Then we've got the 1099K, and this one's kind of interesting. It's definitely been in the news a bit more in the last couple of years with sort of the gig economy, but the 1099K is used to report any sort of income that flows through a payment processor or a third-party settlement company. And so historically, this would be, for example, if your business had a point-of-sale system that processed credit cards, well, the company that handled that point-of-sale system that processed those credit cards would need to issue a 1099K to your company at the end of the year, reporting all of the total value of all of the credit card transactions that pass through that system over the course of the year. The reason that it's gotten more interest or more headlines in the news recently is that this can also cover a situation of an online marketplace that processes credit cards on behalf of sellers. And so for an example, there might be like eBay or Etsy, right? Where, if you're a seller on eBay or Etsy, you're not the one that's actually processing the credit cards for the people that are buying from you. Instead, it's eBay or Etsy. And so as a result, that marketplace has to issue a 1099K to the sellers on that platform. And so you may have heard some talk about that with regards to eBay, and there's some talk about Venmo and PayPal, and we can talk about that a little bit more later on in this presentation. Then there's also the 1099 int, which is the interest income, which I talked about in the previous slide, and we've also got here the 1099 div, which is used to report dividend income, and the 1099B, which the B stands for brokerage, and so that's used to report investment income. Then, of course, the W-9, which we touch on a little bit, but to reiterate, that sort of pairs with all of these different 1099s. So in anticipation of any of these 1099s that we've discussed here, you would typically need the entity that's issuing that 1099 would need to collect a W-9 from the vendor recipient of that income at the start of the relationship in anticipation of that. And then the last ones that I wanted to touch on a little bit are the W-8 and the 1042S. And so these are kind of, the W-8 is sort of the equivalent of the W-9, and the 1042S is the equivalent of the 1099, but it deals with foreign vendors and foreign individuals. And so if you end up paying a foreign vendor for some services rendered, you would use the W-9 to collect their information up front, and then you would file a 1042S in January to report that income. So then the question here is want to talk a little bit about is why accounting firms should take on their clients' filings. And so, the simple answer, of course, is that your clients are obligated to report this income to the IRS. So if your clients are going to be compliant, they need to report this income. But then a little bit beyond that is that your clients are most likely not familiar with this type of income and 1099 filing. They're probably more familiar with W-2 reporting and employee income, but the 1099 income and non-employee compensation is something that they won't be familiar with. And so it can be you can benefit them by being the expert on this area. So with that, I want to move on a little bit and talk about sort of the filing requirements, in particular the deadlines associated with 1099 filing, and then how sort of the delivery options for the recipients of the form. And so this is where this is where some of the complexity feeds into this whole situation, because the IRS requirements can get adjusted, can get changed every year, as well as the state, and there are state filing requirements as well, and that can even be a more complicated sort of situation. But just talking about the IRS, every year the IRS will release updates with regards to what their filing requirements are. A few years ago, they introduced a new form. Sometimes they change boxes on forms. Sometimes they change criteria. For this upcoming year, for 2024, tax year 2023, a couple of the big changes that the IRS is making is that 1099-K form that I mentioned earlier that can affect online marketplaces. Originally, the filing threshold at which point a marketplace had to issue the 1099-K form and file it was above $20,000 paid out to one of their sellers. But currently, the legislation in place right now is that threshold is going to drop down to $600. So, if you are a seller on a marketplace and you sell more than $600 worth of goods on that marketplace next year will have to issue you a 1099-K reporting that income to the IRS. And the interesting thing there too is that although that's what the current legislation is, Congress people have introduced some bills within the last couple of months wanting to adjust that, and so it's even possible that this, that threshold could change at the end of December, and so it's kind of a pain to stay up to date, stay on top of what this, what these changes can be that are happening each, year over year. Another big change for this coming year is that the electronic filing threshold for 1099s is dropping from 250 forms down to 10. So up until now, you were only required to file electronically with the IRS if you filed more than 250 1099s. But starting next year, starting this January, if a company has to issue more than 10 1099s, they have to do it electronically. They can no longer do it on paper via postal mail. Then with regards to what the actual your client's obligations are for 1099 filing, so these are sort of the four important ones that I like to focus on here. So there's the actual filing deadline. Your client must file with the IRS by a certain date, and this varies based on the form type. The 1099 NEC, which is that the most common one that you'll deal with, the filing deadline for that is January 31st. But a few of the other 1099s, depending on what the situation is, may be due to the IRS sometime in February, and then just about all the rest of the 1099s are due to the IRS at the end of March. In addition to filing with the IRS, the 1099s your client or the company issuing them must provide a copy to the recipients, and there's also a deadline with that. And for all of the 1099 forms, the deadline to provide it to the recipients is January 31st as well. If your client intends to provide an electronic copy to the recipient, they are required to get explicit consent from that recipient, to the recipient stating, yes, I consent to being given an electronic copy as opposed to a paper copy. And then finally, even if the recipient does consent to that, your clients must allow for the recipient to change their mind and request a paper copy. And if the recipient does that, then your client, the company issuing the 1099, has to provide a paper copy to those recipients. And then, so these are kind of at the federal level, and then at the state level, it can be even harder to stay on top of the different filing requirements, because every state may have their own requirements that are slightly different from the IRS. The states don't do a great job of keeping their websites up to date on what the filing requirements are. Sometimes you have to, call up the Department of Revenue to find out exactly. The states don't do a great job of making their changes visible right away. And sometimes it may be that even, early January, a state may make a last minute change to filing requirements. And so I wanted to just kind of go over some of the more sort of odd situations that you can come up, just give a few examples of those. For example, California requires that there's a 3921, 3922 form, which is, it still falls into the 1099 category of forms, even though it's called something different. And even though California participates in this program, which is known as the Combined Federal State Filing Program, and that's a program where the IRS will actually forward these 1099 returns onto the states, even though California participates in that program, They require direct filing of these two forms, and the only way to find out about that, it doesn't even say on their website, is that you have to, if you contact one of their agents from the Department of Revenue, they'll let you know that that's the case. Another one kind of similar is in Oklahoma. Even though their website lists the combined federal state filing program as an acceptable option for filing 1099s, it turns out that if you talk to one of the agents, the NEC is not included and must be filed with them directly. And then the last example here is sort of an off-the-wall one, South Carolina. So if any state income tax was withheld from those payments to the vendor, then the 1099, in order to file with South Carolina, the 1099 actually has to be burned to a CD-ROM in this sort of antiquated text IRS format, this format of sort of a specific text file that the IRS requires, has to be burned to a CD-ROM in that format and actually mailed to the Department of Revenue. So you can see that some of these sort of state filing requirements can get a little bit crazy and can be quite a pain to keep up to date on. Then I think we're going to jump to do a quick polling question here. I think, Gail, you were going to bring that up.
Yeah, I'm still laughing about South Carolina. I feel bad for those people.
Yeah. Thankfully, that's a more uncommon situation where state income tax is withheld. But if you're in that situation, it's like,
yikes.
What a pain.
Okay. All right. Our first polling question. It's a true or false question. Each type of non-employment income requires a different version of the 1099 form to report that income to the IRS for tax purposes. Is that true or false? Go ahead and select your answer and then click Submit. And you'll see the answers appearing on the screen shortly as they come in. While we're waiting for that, two things. First of all, if you had any trouble answering that, sometimes if people have pop-up blockers or something, they may not see the polling question. You can go ahead and put your true or false answer in the Ask a Question box, and we'll pick it up there. The other thing is, I didn't mention up front when I introduced this event, but this event does qualify also for IRS CE credit. So if you need IRS CE credit, go ahead and just enter your PTIN number in the Ask a Question box, and we'll record it there, and we'll go ahead and send in your credit to the IRS. Okay, and it looks like we've got about 70% saying true to that question.
Yep, well done to those 70%. All right, well, let's go ahead and move on. I think we've got a couple more polling questions over the course of the rest of the webinar, so we'll get those up there here in a bit. All right, so moving on here a little bit. Next thing I wanted to discuss was talking about some of the penalties associated with 1099 filing. And so from a sort of a federal IRS perspective, there can be both monetary and just, I guess process ramifications is how I would describe them. But, from the IRS perspective, if there's any kind of 1099 non-compliance, it can result in what is known as backup withholding. And so this is where the company that is paying that non-employee income will actually need to withhold a percentage of that income in order to submit to the IRS at the end of the year for as sort of income tax. And clearly, that's a situation that no company wants to be in. They don't want to have to be withholding, income from contractors, and where do they store that money, and so on and so forth. So that's a pain. There can be fines associated with this if you submit 1099s that are missing data or that are have inaccurate data. You can potentially be fined for that and result in this backup withholding. And as part of that process to going down the path to where you have to start doing backup withholding, you have to actually go through this process of sending out what are known as B notices to the recipients. And this is kind of a painful process because the B notices can't be done electronically at this point. The IRS requires that they're actually mailed to the recipients. And it's kind of this packet that includes a W-9 form where you're asking the recipient to fill out and fill out the information with regards to their tax ID, as well as some wording and information that the IRS requires with regards to backup withholding. And then the penalties themselves can actually be not insignificant, right? Depending on the timeline or how long it takes for you to get the missing information to the IRS or correct the incorrect information to the IRS, the penalties can range from $60 to $630 per form that has missing or incorrect information. Then from the perspective of your clients and your clients' vendors, it's important to keep in mind that sort of privacy and security are paramount here, right? This is, you are processing highly sensitive information. You know, the 1099s and W-9s contain social security numbers and legal names. And so you have to be very careful when you're involved with this process to treat this information securely and make sure that you don't have a data breach, because that can result in sort of catastrophic litigation. And then the bottom line, I would say, is that even if you do, you do avoid penalties, you get everything in on time, and you do handle everything in a secure and appropriate manner, it can just, the whole process can be quite a drain on resources. It can be, depending on if you're scrambling at the end of January. We hear countless times from customers of ours where they're frustrated because they end up with, a couple $100 in late fees because they couldn't get it done quite in time, or, they have to have a few employees that spend, a week during the month of January focused just on this, and they spend, $400, $500 on paper, envelopes and IRS forms and printing them out and folding and stuffing them. And it's just a painful process that people really sort of dread at the end of the year. And one of the things that contributes the most to this is making sure that you have correct information, right? Because that if you don't have that correct information, it's, you may be subject to penalties. And so the sort of the areas that you're likely, or that are most common to have incorrect information, is if you don't have a correct tax ID for this vendor, or you're missing that tax ID. You don't, for whatever reason, you don't have the correct legal name. Maybe somebody misspelled it when they entered this, this vendor into the system, or maybe somebody got married and they had a legal name change, or the business, if it's a business, the business had a name change. And so making sure that you have that information. And then another one that people sometimes don't realize is that, if the company that's issuing the 1099 has a state ID in the state where, that recipient lives, they should be including that state ID on it, so that when that form gets filed with the state can actually match it up with the company as well. And a lot of times this just gets left blank. Then to dig in a little bit more along with the monetary penalties at the IRS perspective. So you can see here, it kind of depends on how long it takes for you to get the missing or incorrect information fixed. And so, if you get it corrected within the first 30 days, the IRS says that it'll only be 60, the penalty that they apply to you will only be $60 per form. If it's more than 30 days, but before August 1st of the following year, then it's $120 per form. If it's after August 31st, then it can go up to $310 per form. And then if the company never actually gets correct information, it can be as high as $630 per form. And this actually represents right here an increase this year. I think it's, last year it was 50, the lowest here was $50 per form. And so the IRS is actually increasing it for this coming filing season. So given all that, why is it important to gather these W-9s? And so, the most important thing, of course, is that you are using that to collect the accurate tax ID and legal name for the recipient, so that you don't find yourself in that situation where you've submitted 1099s with missing or inaccurate information. And one thing that we've really noticed in this space is that smaller companies often, larger companies may have a pretty good process in place to gather those W-9s as soon as they sort of start a relationship with a vendor. But smaller companies often don't do a great job of collecting these W-9s up front. And that leads to just a big scramble in January, where you realize, oh my gosh, we paid these 7 vendors over the course of the year. We need to issue 1099s for them, but shoot, we never collected tax IDs. What are we going to do? Now we have to try to reach out to them and get them to tell us what their tax ID was. And at this point, if we're no longer working with them, they, hopefully that they'll do that. But, a lot of times they're just like, whatever, I'm done with this relationship. So it's important to sort of do that up front, and that'll make your lives much easier at the January filing season. All right, we've got another polling question coming up here.
Yeah, Tim, before I do that, let me ask a question that just came in from the audience right at the end, which is applicable to what you were just talking about. What if a vendor refuses to give you a W-9?
Right. So if a vendor refuses to give you a W-9, then you will need to submit file a 1099 for that person, but you will actually need to start backup withholding. So you will need to inform that vendor that you will be doing backup withholding for future payments.
Cool, thanks. All right, here's our second polling question. Is a marketplace like eBay, Amazon, or Etsy required to collect W-9s from their sellers? And the answers are yes, they're required, or no, they're not required. And again, if that doesn't pop up for you, you can answer your question in the Ask a Question box, and we'll record it there. So we will wait a few minutes for that to come in, or a few seconds. Okay. And it looks like about 80% are saying yes, these marketplaces are required to collect 1099s from their sellers.
Right, that's correct. And the interesting thing here too is that part of this is due because of this changing in threshold, right? Where previously, if in a sort of like interesting situation, which is considered a marketplace, although it may not seem like that initially up front, but for example, Uber has to issue these 1099s to their drivers, and previously when that threshold was $20,000, they would only have to issue a 1099 to that driver if that driver made more than $20,000 over the course of the year. But now with it dropping down to $600, they're going to have to issue a lot more 1099s. And so this has become a point of concern with a lot of the marketplaces where they, before they could be a little more loosey-goosey about collecting W-9s because they may not have to issue that many 1099s. But with this coming year, they're going to have to be more on top of collecting that W-9. And from an sort of accountant's perspective, it's also interesting to think about sort of the other end of the equation here, where you may be working, some of your clients may actually be marketplace sellers. And so it's worth being knowledgeable about this so that you can inform them, hey, you may be receiving a 1099K this year when you haven't in previous years, and it's because of this. Okay, so wanted to talk a little bit about, from our perspective, what a good year-round compliance timeline looks like. And so right here we've kind of outlined it a little bit, and it may seem a little bit interesting that this timeline starts with Q2 and ends with Q1, right? But for the 1099 filing season and perspective, everything happens in January, and so you really sort of, the timeline leads up to that January, but Q1 is when all the filing is due, and so that's why it's at the end of the timeline here. And so our recommendations say that in Q2 it's a good idea to determine who internally owns the process of 1099 filing and W-9 collection. and to start evaluating and select an e-filing platform that your firm or that your business will use to file these forms, right? Then in Q3, it's sort of that's the period to do your due diligence. Make sure once you've selected that platform that you have a good idea of what kind of how you're going to get your data into that platform, what sort of format they expect the data to be, whether it's if it's just smaller clients, you may be entering it manually. If it's larger clients, you may be passing around CSVs and making sure then that your accounting systems are able to generate 1099 reports that then can be imported into that platform. Then in Q4, you're going to want to sort of do a pass where you check up on legislative updates by the end of December and leading into the first week of January. And then the filing season, of course, kicks off in January, and that's when that's the busy filing season, and you'll have most of the filing done by the end of January, with just some smaller subset of those 1099 forms that may trickle on until the end of March. And then I wanted to give sort of maybe a quick demo here of what a filing platform that can help streamline this process and make the whole process quite a bit easier. We'll demo the Avalara product here, but there are other filing platforms, and so this will give you an idea of how they would work and why it makes things quite a bit easier. So let me bring up my screen here real quick. Okay, there we go. Okay, so let's go ahead and we'll just go through the whole process of collecting a W-9 from a vendor all the way to filing that 1099 in January for that vendor. So I'm going to go ahead and sign in here. We'll go in. And so with most of these platforms, you can enter multiple companies. And so, for example, here you're looking at multiple companies, and from an accountant's perspective, you would typically have one or more companies per client. And so we'll just go through and quickly add a company here. Let's call it Al's Masonry Repair. You can see I've used that one before. You're going to have to enter the company EIN, fill in the address of the company and a phone number for that company, and then in general, you're going to want to find a platform that will do sort of 10 validation as the vendor is filling out their W-9 form. And this is a process where you can check that social security number or tax ID and name against the IRS database to make sure that it matches something that the IRS has on record. And then now at this point, you can just go ahead and enter a request for a W-9 from a vendor that this company is about to start doing business with. So we'll go down here. So send it. So you have if all you really need at this point is the vendor's name and an email address for that vendor. We'll click send the request. And then at that point, the platform will actually send an email to that vendor stating, hey, we, you have a request, and let's go back. And I've got one of these open here. Just a second, and we can sort of show what that looks like. So switching back over to this one here, I'm going to go ahead and pull up. So in the case of this one here, we've got a company, this Durable Cookware LLC, and they've requested a 1099 from this vendor, Andrea Bennett. Imagine the situation, like I said at the beginning of this call, where that's the freelance writer that did the customer newsletter, monthly newsletter. So then Andrea is going to receive an email like this from the platform, basically stating, hey, Durable Cookware is requesting a W-9 from you. She will click on this. It will take her to a page, and now she is prompted to fill out a form which basically mirrors exactly what the IRS W-9 form looks like. So she has to provide her name, what type of business it is. She has to provide her address. She has to provide her social security number here. So, and then she has to give her consent, choose whether or not she's willing to receive her 1099 electronically, and then sign the form at the bottom. And then, so this is an example here. I wanted to demonstrate this, that 10 check that we've done. And so in this case, she either had a typo in her 10, or maybe she, for whatever reason, she didn't get her Social Security correct. And so platform on the back end checked that and said, okay, that doesn't look right, and prompts her to go in and enter the correct information. So if we come back down here now and put in the correct tax ID, and these numbers are just for demonstration purposes. These aren't real Social Security numbers here. And so, okay, so this time was successful. So at this point, she submitted that W-9 to Durable Cookware, who would, potentially be a client of yours if you're an accounting firm that's handling Durable Cookware. And this vendor now can also, after submitting it, can download a copy of that W-9 for her records if she so chooses. And you can see what that looks like here, right? And so now if we come back here and we reload this page, we'll see that this one has now moved. We can see that, okay, so now she has actually, this W-9 request, she has signed it. She's consented to electronic delivery. This is the type of business, and it gives the date that this all took place. And so now you've collected a W-9 from this vendor on behalf of your client, and the client now, this company Durable Cookware is good to go with regards to having an ongoing relationship where they pay Andrea Bennett for services. Then in January, the process sort of looks like you can come back in here and you can say, okay, I'm going to need to issue 1099s to a bunch of these vendors. And so you can click a button here, and we just say, in this case, we're only going to do this one for Durable Cookware. So we're going to say, I want to transfer these W-9s and create 1099 NECs from them. And so if you click this button here, so that'll go into effect. And then if we switch over to the 1099s, we'll see here, we've got Durable Cookware. And if we see right in here, it has created this Andrea Bennett. I had this Durable Cookware in place before from a previous demo. And so that's why you see this other one, but it just transferred this new one right here. And so we've got, at this point, it's pre-populated this 1099 NEC with all of Andrea Bennett's information from what she filled out when she filled out that W-9. And so at this point, all that needs to be done is you come in here and fill in the amount that she was paid at the end of the year. Say it's $7,800, and then click Save at the bottom. And then at this point, you can choose to e-file this. And so in the case of, we're going to e-file this one form. And, some of these platforms offer additional services, like we can verify her physical address, and we can do another pass of 10 matching. So, this kind of covers the situation where maybe you collected that W-9 at the beginning of the year, and now something's changed by the end of the year. But we're going to go ahead and skip those. And then you're going to go ahead and you can see here, you can sort of choose when to have this form e-filed with the IRS and when to have it delivered to the recipient. And go ahead and check out. And then at this point, that we are looking good here, and we can go ahead and look, and we'll see this Andrea Bennett right here. It's scheduled for delivery. You can see it's scheduled to be sent to the IRS, and it'll be scheduled to be emailed to the recipient on these days. And then the evening of that day, it'll actually get sent to the IRS and to the recipient. And so you can see this whole process. If one of these platforms can be extremely helpful, because it really streamlines this process, and you no longer have to deal with, in some of these situations, people were still doing paper mailing, so you don't even have to, deal with postage, deal with printing things out and folding and stuffing. And it just really makes it easy to go from that collected W-9 to a filed 1099 in January. Okay, let's see here. Let's switch back over. And then I'm going to go through, I think we're getting close to the end here, but I think we wanted to touch on, I wanted to sort of go through and just talk about a little bit about sort of some horror stories or situations where we've come across, right? And so what can lead to these filing horror stories? Of course, the biggest one and the most important one is if you don't have that correct tax ID from your vendors when you file the 1099. And in this case, you're going to get this notification from the IRS. It's called a CP 2100 notice. and your client will need to rectify it with the vendor. And sometimes this involves, if you can't get that vendor to provide a valid tax ID, you are, at that point, the company is going to have to start backup withholding, which is such a pain. And if you can't actually rectify it with the vendor, the company may be subject to penalties by the IRS, and depending on how long it takes for you to rectify it, you may be the client may be subject to penalties by the IRS. And sort of follow on from that is, if you aren't collecting these W-9s in the first place, like we outlined before, the client can be fined a fair amount per form, anywhere from $60 to $630 per a missing W-9. And some of your clients can be filing a lot of 1099s and maybe missing a lot of W-9s if they haven't done a good job of collecting that up front. And then if you are, if your firm is managing the W-9 collection and storage and the 1099 filing yourselves, it's very important that you're up to, on top of the security and privacy standpoint, right? Because these forms contain PII, very important information that it would be quite bad if there was a data breach. You don't want to be the next Equifax because for some reason, somebody emailed a file or you had somebody's laptop that was stolen or so on and so forth, and all of a sudden a bunch of these forms have been compromised in some way. And so you do want to, that is something that you will want to consider when you're looking at using a filing platform, right? You want to sort of inquire about their security and privacy practices, and the Avalara 1099 product is in the process of actually going a sort of a strenuous security audit, which is called SOC 2. And so we're going to have the SOC 2 Type 1 certification at the end of this quarter, and looking at upgrading to Type 2 in the first half of next year. And then, I just wanted to touch on here a little bit about, some of, in my experience, some of the horror stories that I've personally heard from customers in the past. And, we talked a little bit about, the sort of smaller horror stories where it's just, people, for whatever reason they haven't collected W-9s, they don't have a good process in place, and so they end up filing a little bit late, and they're subject to a few $100s in penalties, and it's something that they dread each year, right? Or maybe they're still doing it on paper, and they end up spending $400 to $500 on paper stock and envelopes and whatnot. Those are the more common sort of smaller scale horror stories why people dread this 1099 filing process. And then at larger scale, we were talking to a customer last year, a marketplace customer, where they had not done a great job of collecting W-9s from all of their sellers, and they ended up with over 1,500 CP 2100 notices, where they had to actually postal mail out to 1,500 plus of their sellers this B notice packet, and this whole back and forth with all of these sellers to try to get this rectified, get correct tax IDs and names on file for these sellers. Another sort of surprisingly common horror story that we hear, dozens of times each year, is where a company doesn't have an owner of this process in place, sort of like what we referred to in that timeline that we showed earlier, where you have an identity, a company may have not have identified who owns this process. And we have multiple customers each year where multiple people from the company have actually filed the same 1099s, and so this ends up in duplicate reporting from the IRS perspective, and that's a bit of a tangled mess to sort of unravel with the IRS, where you have to get in contact with the IRS and explain the situation to them. It's not an easy way to just submit an electronic correction, because the IRS doesn't have a great way to identify when you submit a correction which of the duplicate reports is being corrected, and so it's a painful process. So that's another reason why you want to sort of be thinking about this throughout the year and know for sure who within the company and who within, you know, the accounting firm is responsible for owning the 1099 filing process, and make sure that that's handled by that person at the end of the year. And then sort of to wrap up here in conclusion, wanted to point out a few things that you should think about when you are looking at a solution for 1099 filing and W-9 collection. So you want to make sure that the process to onboard W-9s is very streamlined. It's an easy process that vendors will be comfortable filling out that W-9. You want to make sure that security is very important to whatever platform that you're working with, because these forms handle very secure data. You want to make sure that it's an easy and automatic process to transfer that W-9 information over to the 1099 forms in January when you're ready to do the 1099 filing. You need to make sure, of course, that e-filing with the IRS and delivery to the recipients, that's kind of like the core thing that must be done from the IRS perspective, so that's non-negotiable there. Then you really ideally want a platform or service that will store these filings for you year over year, and will have sort of a historical record, so that if you ever get audited, you can go back and see exactly what date a 1099 was filed with the IRS, or exactly when it was corrected with the IRS, and have that there for archival purposes. And then another one that we haven't really touched too much on in this webinar, but something that you should consider, is that making sure that whatever platform or solution you choose makes it easy to file seamless corrections with the IRS, right? Because, you know, inevitably nobody's ever going to be perfect. No company is ever going to be perfect with regards to, you know, what was paid or who the vendors that they worked with, and you are going to have to do some volume of corrections after that January 31st deadline. Okay, I think we got this final poll here.
Okay, our third polling question is, are you interested in learning more about Avalara 1099? And please answer yes or no to that. And while you're coming up with that answer, and then go ahead and click submit when you do that, Tim will turn it back over to you for your final thoughts.
Sure. Yeah. So I think I'm looking at the order of the slides here, and I would like to. I mean, we've got just a few minutes here. I would like to sort of look through the Q&A list here really quickly to see if there are some questions that I could potentially answer while we're able to do it. So let me take a look here. Let's see here. There's one that's asking, okay, why should I schedule e-filing to the IRS in March rather than right away? Okay, so this is a good question. This is something that people often ask our service, our customer support team, because in our platform, when our customers are in there choosing to file these and choosing the dates to have things filed, we actually sort of default to a date that's not today, a date that's sort of out in the future a little bit. And this is because this allows for the electronic delivery to the recipient to happen right away. And then if the recipient notices anything wrong about that 1099 form that they received via email, they can notify the company or the accounting firm that's handling this process and say, oh, hey, you have the wrong social security number on file for me, or hey, that's no longer my name has changed. I got married last month and now my name is this, or this amount doesn't look right. And let the accounting firm that's handling this process or the company know about this discrepancy, and then you can go in and make a change, update that information. And this all happens before the forms actually get filed with the IRS. And so that sort of ensures that when they get filed with the IRS, they have up-to-date and accurate information. Let's see here. I'm looking at So can anyone check if an ID number really belongs to someone who puts an ID on the W-9? So yeah, that is an important thing. That sort of feeds back into what I mentioned when whatever platform or solution that you are evaluating, you should ensure that they are able to do some sort of tax ID check. And so if they do that, then they will be able to verify, yes, this matches something from the IRS database, and you will know for sure, yes, if that match passes, yes, this is a valid name and tax ID and won't be flagged by the IRS for being inaccurate. Let's see here. I'm looking at, do I need to file a 1096? Okay, so this is also another question that comes up a lot. So a 1096 is actually, this is probably somebody that maybe is more familiar with filing the paper filing process if you were doing this historically and filing your 1099s with the IRS via postal mail. And the 1096 is a form that when you file those via postal mail, you actually need to include this 1096 form, which is kind of a summary form, which sort of totals up all of the, tells the number of 1099s that you're submitting and what the total amounts are. Turns out that if you do electronic filing with the IRS, a 1096 isn't needed at all. They're able to sort of calculate that on their back end, and so you don't have to do a 1096. So if you use a platform like Avalara's, then you don't need to do a 1096. And that also applies. We haven't really talked about W-2s and W-3s, but W-2s, there's a similar form to the 1096, which is the W-3, and that's also not needed if you're doing electronic filing. Let's see here. Okay, so we're just about at time. I think we had maybe one or two slides here that we wanted to talk about here right at the very end, so maybe I'll switch over to that. I will try to, it looks like we do have a few additional questions that we weren't able to get to, so I will try to, our team will make sure if we can sort of read through those and reach out to the people asking those questions via email to see if we can get those answered as well. Let's see here. So, but let's go. I think we wanted to do a little bit of a wrap up here. And I think, Gail, were you gonna, are you gonna take this, or did you want me to wrap up here?
Yeah, why don't you move your slide along, and meanwhile,
Okay.
I'll give some closing information to the people who are attending. We want to thank all of you, of course, for the time you spent with us today, and thank Avalara for making this event possible. We will present an evaluation form on your screen, so if you have that'll be after the sound goes off, but if you take a moment to answer those questions, that will be helpful to us. As I mentioned earlier, your CPE certificate will come into your email box, so look for a message later today from cpapracticeadvisor.com. If you have any questions about CPE, and several of you answered polling questions in the Q&A, we are doing our best to catch all of those, but if we miss one, if you get a message saying that your CPE certificate wasn't processed, and you attended the whole thing, just shoot me an email, and we'll work on making sure that's corrected. My email is gperry, Gperry, at cpapracticeadvisor.com. Also, if more than one person was watching this with you at the same computer and you need to send me their email address in order to get CPE, let me know. Again, that's gperry at cpapracticeadvisor.com. And that's what I have. Back to you, Tim, for closing comments.
Great, thanks, Gail. Yeah, I just wanted to take one final minute here to sort of wrap up a little bit about our offering for accountants here at Avalara. So, with Avalara for Accountants, there are 3 ways in which we support accountants. We have this referral motion where the firm can easily refer their client to Avalara, earn a commission, and your client works directly with our specialists to help them evaluate and implement our compliance solutions. And then in addition to that, we can, by utilizing tools designed for you, the practitioner, to use in your firm to deliver outsourced tax compliance services. and then through certification to implement Avalara's solutions via the Certified Implementation Partner Program. If you're not, if you're just starting out, there's not necessarily a right way or a start here. The point of entry is that these are all different options that can work for you. And then just wanted to close with saying thank you, everybody, for your time. We really appreciate it. And hopefully you've found this beneficial. And like Gail said, you can reach out to us and we'll try to get through any of those questions that we missed. All right. Thank you very much.
All right. Thank you all very much. Our audio is going to end now.